Good afternoon, ladies and gentlemen. Welcome to IPE. I'm Brendan Mater for IPE, and today we'll be finding out how asset owners and asset managers can systematically evaluate climate-related risks on infrastructure they own. Sounds a simple enough task. I mean, plenty of information exists on buildings' resilience. It all starts with plans that are drawn up years before any ground gets broken. The issue, however, may be that this information is not widely available. And so our speakers today claim that while climate risks are widely acknowledged, there's still no comprehensive sector-specific tool that links infrastructure type and exposure to the most powerful strategies for reducing risk. Let's introduce the speakers to say some more. First up, Nishtha Manocha, project lead on ClimaTech at the EDHEC Climate Institute. Welcome to the IPE channel, Nishtha.
Thank you, Brendan. Thank you for having us.
Give us a few words on your role there.
Hi, everyone. I'm Nishtha. I lead the ClimaTech project at the EDHEC Climate Institute. I'm an engineer by training. I have a PhD in civil and environmental engineering, specifically in how do we build adaptive infrastructure in the face of climatic uncertainty. And over the past 6 years at EDHEC, I have focused on building financial and non-financial data for infrastructure asset owners and asset managers.
Brilliant. So you've got experience assessing infrastructure projects. You've been on site. You've worn the hard hat.
Yes, exactly. I worked at the intersection of financial and climate risk to infra, not only at the sector, but also the company and the asset level. Great.
Now, joining Nishtha, we have Conor Hubert, Sustainability Research Engineer at ClimaTech. Conor, welcome to IPE.
Hi. Thank you very much for having me.
And like Nishtha, you haven't got a background in finance. It's in engineering. Say a little bit about that.
Yes, very much so. So my background is also civil engineering. I was an infrastructure design engineer for about 5 years, then a sustainability consultant, kind of in that built environment space. And then about 2 years ago, I jumped ship over to EDHEC.
It's great to have you both here. Now, the ClimaTech project we're going to discuss over the next hour or so, it came from a very simple proposition. I think it's from your colleague, Frederic Blanc-Brud, who said if investors want a handle on how resilient their infrastructure investments are, where do they go? Where do they get standardized information? Is that right, Nishtha?
Absolutely. The objective of this exercise from the beginning was to create systematic and scientifically robust insights into how infra can decarbonize and build resilience to physical risks.
So one way to respond to this simple but profound challenge is to think, well, where is the data? There must be data somewhere regarding transition risk. You know, I claimed at the top of the show that it exists. I suspect it's in, engineering firms, in databases of the global construction firms that build these assets. The point is it's not readily available in the world of infrastructure finance. That's your contention, Conor, yeah?
Yeah, pretty much. I mean, when we started this out, it was very much we would find information that was at the kind of very, very high level, intergovernmental organization type level, or squirreled away in individual construction project reports, never saw the light of day type of thing. So, it wasn't publicly available. It wasn't systematic or comparable. It certainly wasn't easy to use if you managed to get hold of it. And commissioning it would be incredibly expensive to do.
Okay. So what we're going to do, I mean, it sounds worrying. We're going to check with the IP audience today in a poll whether the level of comfort, shall we say, is higher or lower than the EDHEC findings from a couple of years ago. So we're going to ask you this question, folks. I'll start the poll now. How prepared is your organization to address physical and transition risks at the asset level? Okay. Answer one, sorry, we have a comprehensive plan covering both physical and transition risks. Answer two, we have strategies in place for physical, but not transition risks. Answer C, we have strategies in place for transition risks, but not physical risks. And answer D, we are still developing our approach and seeking guidance. I'm going to give the audience about a minute to respond. But while they're doing that, Nishtha, I was going to ask you that it's not surprising, perhaps, that a typical pension fund, even a quite large pension fund, just doesn't have the bandwidth to understand transition and physical risks of each of its infrastructure holdings. It might be a handful of people running 10 billion euros, $10 billion worth of pension plan. That's quite normal. That's spread out across all different asset types. It it might almost be too much to ask them to assimilate this kind of information.
Yeah, I think that's completely fair. So in what we have seen, most infrastructure investors probably, rather especially those outside the largest funds, don't have the in-house expertise to assess climate risk at the asset level. And it makes sense, because unlike equity or debt instruments, infrastructure assets are physically and individually exposed. Physical risks like flooding or transition risks resulting from carbon emissions, these are really asset specific. And to understand them, you need technical details, you need to understand what's going on, you need to know the operations of the asset. And this is putting all of this information together can be quite overwhelming without the skill set and without the resources. So while they may recognize that climate risks matter, but without clear structured inputs, I think it's really difficult to turn that into actionable strategies. And that's why we need tools that make risk assessment more systematic and comparable, especially for those who can't do deep dives for every asset.
Thank you. Yeah. Consistent. That's another adjective we could use, couldn't we? Yeah. Now, this is interesting. The answers are in. And 45% say that they are still developing their approach and seeking guidance. Hopefully, you know, ClimaTech could help them. Actually, that's just nudged up. 23%, so still just under quarter of today's viewers say we have a comprehensive plan covering both physical and transition risk, which is heartening to hear. 23% they've got strategies in place for physical risks, but not transition risk. So far and away, the least popular category, we have strategies in place for transition risks, but not physical risk. Only 4%. Kind of makes sense. Your initial feedback, Nishtha, on those responses?
First, I'm very heartened to see that it's more than 16%. The number that, well, actually disheartened.
Not too much more. I mean, 7% more. Yeah.
But 47% of people are still developing their approach. So that means this data is still unavailable to a large set of people. Then it's also interesting. There we go. We have another vote in. So we do have second place comprehensive plans covering both transition and physical risk. This is fantastic. This was negligible in our previous poll. I'm quite happy to see this, and I quite look forward to, which is true. In the past, we have now seen the quality of disclosure reports and the quality of strategies that people apply and things they do increasing. That's interesting. But I also like this answer where there are strategies in place for physical risks and not for transition risks. It's interesting because over the recent past and given the regulatory landscape, we do understand and we do get this feedback from the market that physical risks do offer a higher, like from a risk perspective itself, the financial implications of physical risks do outweigh the financial implications of transition risk. And this has been consistent across research and across findings in a couple of papers that we see. So to me, it's only logical that for people who could begin to address one of these strategies, they choose physical risk before transition risk.
Yeah, physical risks are here and present, aren't they? And finance, well, accounting, you know, tends to be on an annual basis. So it's next 12 months. Yeah, this is all very, very understandable. I think, again, if we think what this kind of universal database almost that you have, it's a repository really of information. We're going to see a picture. Conor's going to bring up some slides in a minute. But again, I think another group of people for whom it might be useful, we haven't mentioned yet really, are regulators. They too, well, they've got a universal interest in this. They've got no purchase on it. They don't own anything. Who wants to answer this one? I think Nishtha, say a bit about possible users of ClimaTech.
Sure, Brendan, I can answer that. So ClimaTech can be universally applicable to many stakeholders, to LPs, to regulators, to owners, to investors. Because what it essentially does, the heart of it is very simple. You take any infrastructure asset and you try to identify what can this asset do in a way that matters, in a way that moves the needle, to reduce its risk, to reduce both its transition risk and to reduce both its physical risk. So in that sense, where there is lack to access or lack of consistent access to asset level data made between LP, a regulator, or a GP, especially when it comes to climate risk, ClimaTech can prove to be very useful because it lets you do something that goes beyond relying on bespoke inputs. You don't need a heavy risk analysis or a scenario planning. All you can do is you look up the type of your asset and you know what's useful and what's objective. And that's I think, especially appealing to any actor that needs transparency and also that needs a scientific background to back up their claims and their analysis, and who don't have teams of engineers or climate scientists that have.
Yeah, going back to where we were beginning, where this information might currently sit, it might be very expensive to do an asset-specific survey, and that may be a reason that daunts the viewers today about having full awareness. We're going to come on to that in a moment, but before then, Conor, I'm going to I'll bring up the first slide for you, because a picture tells 1,000 words. And, why don't you talk us through exactly what ClimaTech is?
Yeah, sure. Thank you. So yeah, as you said, it's basically a giant repository of strategies that any of the stakeholders that we mentioned before can use to reduce their transition risk or their physical climate risk to their assets. So it's built on the TICS classification of infrastructure types. There's 8 superclasses of infrastructure, and we cover 7 risks. So there's the 3 transition risk scopes, scope 1, 2, 3. And then for physical risks, it's floods, extreme wind, extreme heat, and wildfire. And we have a database of over 100 strategies. They make over 1,800 specific combinations for different asset types. And this is for a typical asset of that type, and what we have judged to be material. So we have excluded some things and included others. The database as it stands, the one it will become publicly available soon, is qualitative. However, all of the values that go into making those qualitative assessments are quantified. They're backed up by scientific literature. Everything is referenced. So there's kind of try to make it as digestible as possible whilst having a very robust scientific background to it. And there's a database, and then on our website we have a bunch of sector-specific papers if you want to do a bit more research and a bit more deep dive to get a better understanding.
Excellent. Yeah. Just on that point, some of those papers Conor just mentioned are available. There's links to them in the attachments icon, folks, on your the right-hand margin of your screen. So you'll need to register with the EDHEC Climate Institute, but it's free. It's very simple. And then you can start enriching your knowledge, because this is what really ClimaTech is about, Conor. It's a very helpful educational tool for asset owners and asset managers.
Yeah, very much so. I mean, it's designed by engineers, but it's based on scientific research, as I said, but it's for the finance industry. We've done a load of the kind of heavy lifting, if you say, in terms of doing the research for you. Here it is. A lot of the conversations we were having before we started were along the lines of, oh, great, we know this strategy is good, but how good? Can you tell me what effect this is actually going to have? And so what we've done is we spent 18 months or so, and we have the numbers. Here we are. So it's an educational tool about what, but also how much, how good, and that kind of thing, and what you can actually do.
Yeah, might be a good point to say to the IP audience, typical live interactive webcast today. If you've got any questions for Nishtha, Manocha, or Conor Hubert from the EDHEC Climate Institute about the ClimaTech project, fire them in. They're happy to take them. We're on air for a good 30 minutes at least more. I think that, the next point for me, Conor, is to go back in the stage. There is something about greenwashing in the title of today's webcast. You had a light bulb moment a few years ago with regard to this data. It's not light bulb in the usual sense of the word. you write in the executive briefing on ClimaTech that you could see sustainability reports where the owner of the asset had quantified how many new LED light bulbs they'd put into the building when really it didn't move the needle in terms of emissions. There were loads of transport, different vehicles on site belching out emissions. People reporting isn't standardized. There is still greenwashing. It's not always easy to find out even where the emissions are in your asset, let alone how you're going to reduce them.
Yeah, very much so. I mean, without wishing to alienate the audience, I would say that it's certainly less egregious than it used to be in terms of greenwashing. But when we were looking through company sustainability reports and that sort of thing, there were a few kind of strands of it that we were teasing out. So one of them was kind of obfuscation. So people were kind of hiding numbers or making them unclear as to what they actually represented, how much of their emissions these strategies covered, what they were doing about it, and that kind of thing. So that was one bit. Another type that we found was omissions. So people would just completely ignore massive sections of their emissions profile. So, for example, electricity networks ignoring, transmission loss strategies, or transport, as we're going to talk about in a bit, completely ignoring the emissions from the vehicles that use their asset. So that was again another kind of major bit of it. And then the last one was kind of overemphasis, which is what you were just discussing then, where you talk about the light bulbs that you've changed at, say, an airport, but completely, and talked a lot about that, but then not really talked anything about aviation fuel. So it's kind of where you're placing the emphasis. So yeah, we kind of, as we were looking through these reports, we started to notice a few things when we were going through.
Might be a bit depressing for the IP audience, given the existence of science-based targets, SASB, and even SFDR for our own, financial community. All these things are meant to reduce, if not almost eliminate, greenwashing. You're suggesting there's still a long way to go. I think, Nishtha, this is you.
I would not take the cynical path down here. So you mentioned the light bulb moment just now, but I also think when we were looking at these reports, a light bulb moment for me was really how well-meaning disclosures can miss the point. So it's not always greenwashing in the malicious sense. Often it's misplaced emphasis or lack of technical insight, or just simply not knowing what matters the most. So while frameworks like SBTIs and SASBs and SFDRs are definitely helping, and we've seen many organizations coming out and report and pushing the boundaries and trying to do what's right for the planet and for the company, but there is also, of course, the point that they're reporting what's easy to report, not what's material to climate risk or decarbonization outcomes. This is where I think that regulatory use case is important. But now risk management is even a stronger one. I feel like in the recent past, risk management has become mainstream, and it's now pushing companies and investors and owners to ask, to look into them and say, really, like, what are the risks we face? What are the most effective levers that we have, and how can we actually address it? So that shift in framing from disclosures for compliance to risk-driven decision-making, this is where the real change is happening, and this is where ClimaTech can actually add real value.
Yeah, a good point. Yeah, don't wait for the regulator's stick. It's actually best business practice. Be ahead of the game. That's good. Let's now ask the question of the IP audience why they might not be ahead of the game, why they might not have done as much, maybe even as they would have liked. Here's the question for you folks. What's the primary challenge your organization faces in implementing climate adaptation strategies? Okay, answer 1 would be limited financial resources. Question 2 would be lack of access to reliable data and decision support tools. Answer 3, uncertainty due to evolving regulatory requirements. Or the last answer, difficulty in identifying and prioritizing asset-specific adaptation measures. Okay, so we'll give the audience the usual minute to respond to that. I might be the cynical journalist, Nishtha, but I'm just kind of thinking it always boils down to money. It's answer A, surely.
I think you're back in your corner there. Well, of course it's about the money, but it's also about the risk behind that money. When it comes to infrastructure, you have an asset that's built, that's gonna last you a lifetime, and that's exposed to risk. The exposure is real. So when you have an asset, you also have to do something about it. You have to act. This isn't theoretical anymore. And that's where the fiduciary duty comes in. So it's not about just delivering returns, but how do you manage the material risks that threaten them? I feel it's about now protecting long-term value and not just chasing short-term performance.
Yeah, well, I mean, that was the point we made earlier, difference between physical and transition risks, isn't it? You could kind of be in denial about transition or say it's hard to model or it's a long way off. Yes, tragedy of the horizons. Let's answers coming in to our poll. And this is interesting. I was wrong. I'm sure you'll be glad, Nishtha, that the journalist is wrong, because the leading answer is lack of access to reliable data and decision support tools. That has garnered well over a third of the votes, but it is a fairly even distribution in as much as limited financial resources, second on 26% of the votes, uncertainty due to evolving regulatory requirements, 21%, and so much conversations across the pond in America about what you should and shouldn't do. A difficulty in identifying and prioritizing asset-specific adaptations measures, 15%. So fairly even spread. Just your reactions.
This is very consistent with all the surveys we've conducted so far, and also with the conversations we have on a daily basis with infra investors. It is, in fact, ClimaTech is driven by the lack of access to reliable data and decision support tools. This was at the primary basis on why we went down the journey on building this ClimaTech database. And just to mention that we built this database, of course, because we wanted to provide the industry with a more standardized way to understand risk, but also in consistency with our ethos, which is doing research for impact. This database is actually a public good. When it will be available online shortly. The papers are already there. You can have a look, you can read them. There are 8 papers for every sector, but an interactive database that contains all our information will be available online for you to use as you like, to undertake risk assessment, to do analysis, and to do a lot more with it.
Yeah, I mean, we should say at the moment ClimaTech is free. Okay, I don't think we've said that yet. We're about 25 minutes in. All these resources are free. You log on and that's it. You don't even need to leave your credit card details. So that's something that should appeal to the viewers. But going back to impediments, and this covers both answers number 2 and answer 4, I think, in the survey we've just done. I think people can get some broad brush data from, say, the likes of the World Bank, these kind of supranational organizations. Then they might get something for asset-specific modeling, which kind of makes sense, but it's expensive. And if you're an institutional investor, you're likely to have economic exposure to a number of such assets, so one doesn't do it. Just to be clear, Nishtha, are you saying that there's no middle way, there's no financial environmental consultancy that can offer something in between? They don't exist at the moment?
Well, they exist now. There is ClimaTech. So of course, but this is where it started, right? This gap was real when we started our research into understanding how you can systematically decarbonize and build resilience for infra. We found exactly what you said. It was either really high-level information that you couldn't really apply to an asset, a sector. You're like, yeah, I know this makes sense, but I don't know how to use it. Or they'd be very time-consuming, expensive consulting exercises, again, which would be applicable only to the asset that it's done for. So of course, you can run these detailed risk assessments, climate scenarios, impact studies, and a lot of people are doing this. It is necessary, it is relevant to help you design a resilient asset. But that level of modeling is resource intensive, and not everyone has the capacity to do it. And you may not need to do it based on your business model, insurance strategies, investment horizons. You may not really need to go down that path. And that's where ClimaTech comes in, a middle path, something that gives you sector level decisions and relevant insights that you can take and apply. So you start from already a collection of engineering insights to take and use as you like.
Okay. Why don't we go back to the slides? Because I think we're reaching the point where we need to give the IP audience a sense of how rich the data are. And again, picture tells 1,000 words. So Conor, I'm going to bring up the next slide. And why don't you, this is very text heavy, folks, but Conor will spend some time talking through the transport sector.
Yeah, yes, thank you. Apologies for slides with tables with loads of text, but I thought it was just a useful example to kind of highlight the actual information you get from our database. So this is an example of the transport sector. So it covers a wide range of transport assets. It's not this particular analysis isn't as that specific, but you can go down to the specific sector level if you wish. So we've got things for transition risk. You know, we've got the strategies, we've got the applicable scopes, we've got the key technologies that you can use to enable those strategies, so you kind of have an idea of what you might actually need to get and do. And then we've got sort of an assessment of how effective that strategy is. And for the likes of the decarbonisation strategies, that's both how the strategy is, its terms of how effective it is on its own, but then also as a proportion of a typical transport asset's overall emissions, right? So you could say, let's go back to my favorite light bulb example, changing to LED light bulbs on itself is really, really good in terms of the emissions of those light bulbs already, but the emissions of an airport light bulbs don't cover much. So overall, is it material or not? And so you can quite easily go through this and say, I want to look at this type of asset. I want to pick out all of the relevant strategies, and I want to see how good they are. And you can, you know, it's quite easy to tell when you're picking apart things like whether something's actually good or worth investing or not. And it doesn't, there's no indication here about, you know, how much it costs or anything like that at the moment, but it gives a very clear indication of what's worth pursuing.
Yeah, I mean, in a way, I hate to use the word cheat sheet, it's just come up to my mind. But if you are under-resourced in every sense of the word, you've got lots of investments, but you've got this fiduciary duty that Nishtha mentioned earlier, this is the kind of data that's going to order your brain for you, order your priorities for you when you speak to the GP, when you speak to the people actually running the infrastructure. It's a path. It's orientation. It's guidance. Yeah.
Yeah, very much so. It's basically, as you say, a cheat sheet. That's a very good phrase. I kept on using the phrase "quick and dirty," but that made it sound like it wasn't robust, where it very much is. It's you know, you don't have 3 months to conduct an assessment of something. You need to know in the next half hour which of these things is likely a goer in terms of your investment and in terms of the strategies that you're going to pursue. Right, well, here you go. You know, here they are, here are the numbers, here's the evidence that you need to present it to whoever, bish, bash, bosh, your investment decision is at least moved along. I won't say it's made, but it is at least moved along. And that's the kind of scenario that we envisage it being used in. I'm sure, you know, it has lots of other use cases that we talked about earlier, but that's, in terms of it being simple, easy to use, it sets out what you need to know quite clearly and succinctly. That's the kind of use case that we envisage it being used for.
Quick and clean. Maybe we can start a new idiom.
Quick and clean is a much better way of saying it. Thank you.
So again, as we delve, just give people a sense, well, how can I interpret this? What can I do? How do I interrogate it? For example, for transport, what we're looking at here, which is quite a lot of information for one slide, are they all the strategies, Conor, or were there more to come? I can't even count them up. Looks, I'm going to guess there's 14 there. Do you understand what I mean? Is this the number of strategies for the transport sector?
I think there were a couple more, but in terms of trying to fit it all on the slide, it got even more unreadable.
Yeah.
But it varies by sector as well. So this is transport, but for the other sectors, there'll be more. Some of them will be less. We tried to cut out so that the list wasn't absolutely endless for each sector. We tried to cut it down to basically the really material things, the things you kind of actually needed to know about, as opposed to stuff that people talked about, but it wasn't really effective.
Yeah. Now, if I ask you a similar question, get some understanding. As you say, this all comes back from scientific and engineering knowledge and practice, way of risk modeling in those disciplines, sort of, rather than finance. And when people start reading the material, you've got things like modeling flooding for a 1 in 1,000 year event, or for heat risk, whether the temperature exceeds 50 degrees. And what I wanted to ask is whether the modeling is specific to the sector globally, because geography is different around the world. So if we've got like 50 degrees heat risk, if I'm in the Middle East, that's serious, but it's kind of familiar. If I'm in Scandinavia, that's different. So I suppose I'm asking how the user of ClimaTech adjusts for such differences when using the guides. I think, Nishtha, you're going to answer this.
Sure. I'd like to make 2 points for this. So the first one is when we look at our physical risk strategies, we're not presenting an example today, but when we look at our physical risk strategies, each strategy is accompanied by a typical design level it's meant to handle. So if you build a seawall, it's typically built against a 1 in 1,000 year return period storm. If you build blue-green infrastructure, it's against a 1 in 100 year flood storm, etc. So that's one way you would typically understand what this asset is survived, what this strategy is built for. But on a more asset-specific way, on a more asset-specific answer rather, each strategy in the InfraTech database is linked to specific filters. So while the database is built for a given sector, when you apply it to any given asset, you have to undergo the process of asset-specific filters. What I mean by that is, if you are a company in the middle of Australia, you should not be asked to build a flood wall or a seawall because there's no ocean for miles and miles and miles away. So in that point of view, each strategy is then accompanied with a set of geographic filters that turn on and turn off based on where you are. Are you close to a forest? Are you close to an ocean? Are you an asset that is in the Middle East, which typically won't really... So if you're an asset in the Middle East, for example, you'll be built with a material that's already being able to deal with heat strategies. So using a heat resistant construction material will probably already be inbuilt. So we account for all of that in asset-specific filters that accompany the strategies.
Yeah, sorry, and just to linger, because you mentioned seawalls, and I know that that kind of area is your initial knowledge, where your PhD came from. The sea is different; it's more violent in different coasts around the world. Presumably, one's building such walls to protect against violence, but in some places, they're going to be very different, marshier places. The asset specificity that you mentioned, does it take into account the local sea, as it were, the local terrain?
So I would rather say that ClimaTech is meant to be a sector level systematic tool. How you take it and how you apply it is actually up to you. So when you have a list of strategies, like Conor had those 14 or 16 strategies up on his screen, which of them apply to your asset beyond the geographic filters, you would know. And that's where this information comes in. For a lot of people, they know what their asset is like. I can't tell you better than you what your asset or your company is like. But do you know what about it? That's what ClimaTech will do.
Okay. Thank you. Let's just end those slides for now. We'll come back to them because we're going to have a specific example, which will help people, again, just understand what ClimaTech can do for them. But first, we're going to have just the last poll, folks. You've been very good so far. This one is very much on this topic. To what extent do engineering interventions, e.g. resilience upgrades or efficiency retrofits, influence your long-term financial projections? Of course, it's a given here that you know about them, that they're well communicated and quantified. 4 choices, folks: significantly, we model and quantify their impact clearly. 2, we believe they matter and we're starting to quantify them. C, we believe they matter, but we currently lack the tools or data to quantify. Or D, we're unsure of their financial impact at this stage. So again, maybe at the risk of repeating ourselves, Nishtha, I'll say to you that this is all dependent on some kind of communication. I mean, arguably, answer C and D say actually there are gaps. That's to cover that. Just give me your feelings. Will the answers be weighted more towards C and D?
I think so. Yeah. And this is it's what we believe. It's what we understand. It's where even if you look at it in terms of growth of business within consulting and physical risk analysis, points to, because of C, it underlies that.
C, yeah, you would expect C to have a high number of votes given the answers to the previous polls, especially that first one about people lacking.
But it's interesting that these answers have been consistent. So we've conducted these surveys and conversations for about 2 to 3 years now, where we regularly meet and we update our knowledge and understanding of the sector. And it's interesting to see that it's still consistent over the few years.
Yeah. I mean,
yeah.
I mean, that's the thing about IP. We should say we focus on Western Europe. We'll cover all other parts of the world, but these webcasts are increasingly international. So we have folks listening today in Japan, in Asia, in the US, in Latin America. So it's not just a European perspective we're getting in these polls. It's hard to see by quite a long stretch. We believe they matter, but we currently lack the tools or data to quantify. Because you are asking here, this is more hard-nosed, it's deeper than the previous questions. It's about engineering interventions, and 70% of the audience currently lack the tools. 5% are unsure of their financial impact. That's honest, that's answer D. Only 5% equally, a real slither, just say, you know, they matter significantly. We model and quantify their impact clearly. I don't know whether that's engineering experts listening today. I don't know whether that's a particular type of asset owner.
But I'm glad that people are modeling and quantifying their impact more recently. And
yes, of course, it's welcome, but it's a very slim minority. That's the issue, isn't it? 15% say, you know, not only do they matter, we're starting to quantify them. So let's just say that I think this webcast is timely. There is a need, yeah. And with that, thanks to the IP audience for your responses. Maybe we should go into an example I'm going to bring up I'm going to bring up this slide actually. We didn't cover this, Conor. Is there, do you want to say a bit more on this, or should we go to the airport example?
I'll just very, very briefly. So something to make it a bit more concrete is again, also if you can just see how applicable strategies are across certain sectors. So this is transport. Some of the strategies are applicable across everything. Some of them are applicable to only one thing. Shore power electrification you aren't going to do for airports or for tunnels, so you're going to do it for ports. So it's just a useful way that you can assess varying asset types. Was all I was going to say with this.
Brilliant. Thank you. Lovely and succinct. We have a question, or a request really, from Pranaputta at FBI. Could EDHEC share a real example or a case study to help understand its ClimaTech database? We can, Pranav. And that's what we're going to do right now. Here it is. Which of you is going to talk us through this Australian airport?
I'll do that. So before I run you through the example, I would like to mention, I would like to introduce Scientific Climate Ratings to you. Scientific Climate Ratings is a new venture of the EDHEC ecosystem, and it's built to bridge the gap between climate science, engineering, and investment decision making. At the heart of it, Scientific Climate Ratings assesses the financial materiality of climate risk. And we provide this systematic asset-level climate risk assessment. So we run our models, we do our physical risk assessment, our transition risk assessment, and we go a step further with using ClimaTech data, where we start to now move beyond the systematic quantification of exposure to see how specific adaptation and resilience strategies actually reduce these risks. And this is an excellent example of the ClimaTech database. So the goal, again, whether it's ECI and ClimaTech or Scientific Climate Ratings, it's to make climate risk actionable. So rather than simply flagging exposure, we want to go ahead and say, what can you do about it? What drives the risk and what is the solution? So it's in fact climate intelligence designed for real world use, and especially in infrastructure and real assets. So what I will show you today is an example of an Australian airport. As Pranav said, it is exactly a no name, no location specific airport, although I do give you the country. These ratings are, by the way, available freely online. You can go and find them. For now, I would like to go through a very quick overview of a physical exposure rating, which is part of a potential climate exposure ratings. So if I could have you focus on the top table, it gives you what we call as the unadjusted physical risk for this airport. So if what this means is that if you only take a location specific, a geographic specific exposure assessment, that is, you know where this airport is, you put it on the map, you draw a boundary around it, and you assess through any risk model what your flood exposure, storm exposure, heat exposure, and wildfire exposure is. That's the numbers you come up with. So let's focus on floods for now. So for this airport, the flood risk is very high. Again, only systematic geographic risk assessment. So 96 on 100 is it's a very high flood exposure, which contributes in giving this asset a physical exposure rating of F. So we had this asset, we got the rating of F. We said, okay, but maybe that's not true because it doesn't reflect reality. Here comes in a very well-written sustainability report. So we use public information that was available in sustainability reports. And from that report, we found out that, okay, this asset actually elevates critical components of the airport. It builds flood barriers where it needs to. And there's a little bit more. It protects itself against storm risk by adding windbreaks and underground and critical components of the asset. So knowing this about this airport, we then can use information from the ClimaTech database, which now tells me, by the way, if you elevate your asset, it's going to be this effective. It gives you the number. And then you can take that number, redo your flood model, and adjust the score. So in taking this into account, we now see that as a result of elevating and adding flood barriers, for this particular airport, the risk level fell from 96 to 66 for floods. And for storms, it fell from 72 to 42, resulting in an overall adjusted physical exposure rating of C. So this is why ClimaTech becomes so powerful in use cases like this. So it goes beyond the fact of telling you that you have a risk. It tells you what you can do about it. Once you know what you can do about it, it can actually quantify the impact resulting from that. Of course, this is a combination of work that comes from Scientific Climate Ratings and ClimaTech, but it helps you use something as systematic as a database and implement it to understand and to give you really asset-specific understanding, resulting in actionable insights. So again, it moves us from a static risk snapshot to a decision-ready pathway, and that's different, and that's very powerful.
Just to be clear, Nishtha, I just want to know how much of this data, you said that this data is available, but that's, I think, because it's a case study. This kind of asset-specific data, which is brilliant, I get it. It's very useful. That is under scientific climate ratings. Right. Yeah. Mm-hmm. So ClimaTech gets you so far, but to get this asset-specific level, I have to invest in scientific climate ratings. Is that correct?
Just also to mention again, scientific climate ratings, we rate 6,050 assets globally, 6,050 infrastructure assets globally, and that PCR rating, or the potential climate exposure rating, at the moment is available for you to see freely across all assets.
Okay. I just almost want to know when the cost kicks in. But it's a good question to ask, let's be honest, if you're offering any service. I'll tell you what, we can come back to this slide if the audience likes, but I think they're getting a flavour really of the kind of modelling, the kind of metrics they can get exposure to. But this is how. You've got both Nishtha and Conor's email addresses if you want to get in touch with them direct, or you can get in touch with Maud Gauchon, who's the marketing manager. Okay, so let's put this up because we're already getting in questions from people sort of wanting to know more. I'll repeat that under the attachments banner, folks, it's a paperclip on the right-hand margin of your screen. You will be able to get links to all the papers that Conor, Hubert and Nishtha Manocha have been talking about today. So that's all free resources. Go sign up, download those if you want more in-depth conversation. Here are their email addresses. We'll leave those up for a little bit longer. This is new. It's great. I mean, it's a privilege for IPE to be broadcasting it. Just reiterate, we've got the details for each of the major infrastructure asset classes, including things like sort of data centers. They are all available. The scientific climate ratings, the kind of basic scores, they're also available. This is also available for free. What other resources, Nishtha, have I missed?
There's actually tons of research on methodologies, on more papers and more case studies and more examples, etc. So you could go to the EDHEC Climate Institute website, and you could in fact get one paper for each big infrastructure investor. So there are 8 of those.
Yeah.
And also in the case of ratings, the ratings are free to view, and as well as they come to use them, of course, there is a fee to use them for different purposes. And while it comes to ratings as well, there are multiple methodology documents trying to look at both the risks individually and also systematic risks and see how they all play together. So I would encourage you to go to the website, not only of the EDHEC Climate Institute, but also of Scientific Climate Ratings. And there is a treasure trove of research papers that we write, as always, a few papers a month.
Yeah, yeah. And that's the email address we have at the bottom there. Yes, climateimpact.edhec.edu. Yeah?
Yes, exactly.
Good. Okay. That is brilliant. It might be time for me to announce that we're going to have a webcast specializing on scientific climate rating. So obvious sequel to today's. That'll take place in a couple of months. That'll be good to see everybody on. In the meantime, do tell colleagues, folks, that they can get this great introduction to ClimaTech. They can watch it again and again, both on IPE.com, but also on BrightTalk, our technology provider. All it remains for me to do today is thank our presenters. Super informative. Thank you both. First, Nishtha, Manocha. Thank you, Nishtha.
Thank you, Brendan, for having us.
And Conor, Hubert. Thank you, Conor.
Thank you very much.
This is Brendan Mayton for IPE, wishing all of our viewers a very good day.